Hello everyone, this is your host Vaibhav. I welcome all of you to today's session of Daily Stock, in which we are going to take a look on the financials of a very well-known, a very popular shopping destination, the TJX. It operates multiple stores under multiple brand names, but the operating model is pretty much similar in its all the stores, which is to offer value, which is to offer the best price. It is a off price retailer. That simply means that whatever merchandise you are finding in its store is valued quite well. It is lower in comparison to other full price retailers. So for any deal, for any discount, all you have to do is rush to any of its stores and you will get a good value for money merchandise, apparels, and other similarly priced items. So this is emerging as a shopping destination of choice for large consumers, and that has propelled its revenues, its sales higher and higher for last couple of quarters, and that has meant that the company is increasing its number of stores, it is increasing its floor space, it is increasing and adding different and newer companies, and all this is happening because it is winning over the shoppers who are opting for this value for money proposition and buying more and more from the TJX operated stores. That has meant that the company's revenues have risen, its operating margin is quite good and increasing, and that has resulted in quite a large net profit for the last quarter, and this has been the case for many quarters. After the pandemic waned, after the impact of pandemic started to recede, more and more shoppers have started to step out of their comfort of the home and go to the retail stores, and this has been a good news for the retail operators like TJX, and it is catching on this shopping boom, and that is also reflected in its share price as well as its quarterly earnings report. If we look at the last quarter's performance for the company, the TJX revenue has risen more than 5 percentage point, and it is above the company's management's expectation. You will see this sentence about the company's plan repeated multiple times over the course of next few pages, because the performance of the company stores have indeed been above the management expectations, and that means it has performed exceedingly well, and it is positioned for the growth moving ahead as well. This is bonanza for the shareholders, because as the company is doing well, it has generated cash more than its expectation, and that cash is eventually going to land up in the kitty of the shareholders, where the plans of dividends and share buyback programs. For the last quarter, the pre-tax profit were up 11.2 percentage point, and the EPS was up 37 percentage point, which is a phenomenal increase. Margin for the whole year is also up in double digits. The EPS stands at 30 percentage point higher in comparison to the prior year. If you go into the details, you will see that it has included the details of its operations and how it has exceeded its own expectations. The forward guidance is also on the brighter side, with the company's growth momentum likely to be sustained in the coming fiscal year as well, and for the fiscal year 2025. The revenues are expected to continue to grow along with the rise in margin and a healthy increase in the net profit as well. So overall, the company has been riding a consumer boom, and it is going to do well in foreseeable. You have seen its share price performance over next, not next, over last couple of months, you would have noticed that it has rallied strongly and it is still in a bullish phase with the possibility of it continuing to make higher highs and higher lows in coming weeks, coming months. So all we have to do is keep looking for the opportunities to buy, and in that context, a buy on dip strategy can be applied. We will look at its share price in details once we are done financial report. For the fiscal year 2025, the company is expecting the consolidated store sales to be up in the vicinity of 2 to 3 percentage point, and the profit margin to be in the range of 10.5 to 10.6. The EPS is likely to be in the range of the EPS to be in the vicinity in the ballpark of $4, and the comparable store sales are likely to be up 2 to 3 percentage point. That means it is expecting moderation in the current pace of growth, but growth is nonetheless growth. It is here you can see the number of stores the company operates in the US and other companies, and if you take a cursory glance, you will notice that its store locations have increased by the end of the year in comparison to the beginning of the year, and that simply demonstrates the company's confidence in its store sales, and that is why it is increasing its offerings in the different parts of different companies. The US remains its primary country of business operations, but it has also expanded in various developed countries, the Canada, Europe, and Australia. Let us take a look on the consolidated statement of income. You can see that net sales are up by more than 10 percentage point, and at the same time the cost of sales haven't risen much in comparison to the last year's cost of sales, and that means its margin has improved, resulting in net income, which is 30 percentage point higher in comparison to the net income of first quarter of 2023. The balance sheet is here, and in the balance sheet, the most important marker to look at for determining how the company has been doing in the short term is to look at its cash flow, and the cash position of the company is quite solid. It is sitting on the cash pile of more than 5 billion US dollars, with the increase of 123 million US dollars in the last year itself. So it has reversed this cycle of declining cash and cash equivalents, with this rise being observed for the last year. It generated a lot more cash from the operating activities to compensate for the cash being used in the investing and financing activity. So that has meant that now it has cash at its disposal, which it can invest for the expansion of the business operations. It has already embarked on a plan to offer some of this cash to the shareholders via buybacks and dividend distribution. Now we head to the JForex 4 the trading platform from the Dukascopy Bank SA, to see how the TJX share price has performed in a short term, medium term, as well as in the long term. This is the short term charting, and in it you can see after the release of TJX quarterly numbers, it saw sharp moves on both the sides. First, it jumped and made a new swing high, but it couldn't really sustain that high. And from those levels, it is around 4 to 5 percentage point lower in last couple of days. But if we consider its prior stock price performance, you will notice that it has been consistently rallying for last couple of months, and it has been in a bull run for last couple of months. But now we will have to adopt a cautious stance because this correction has deepened and taken it close to the prior swing low. So it is going to be interesting to see if this time around the company's share price dips below this prior swing low or not, and that is going to be a critical marker while deciding to take a trade on the long side, because if it dips below this prior swing low, that is going to break the cycle of higher highs and higher lows, and we will have to wait for a new swing high to be formed in due course of time to start looking for the buying opportunities in the short term. But if it makes a fresh swing low, which is lower than the prior swing low, then that is going to be a matter of concern if you are a short-term trader and investor, and then it won't be as easy to go for a long trade because the bearish momentum is then likely to prevail for next couple of weeks, if not more, given the fact that the company's business has been booming. So I think after due consolidation, it might start to rise again. But for us, the next couple of days are going to be crucial. So keep a keen eye on the share price performance of the TJX over next few sessions, and you will get a good idea of how it is likely to perform over next few weeks simply by observing the charting for the next couple of sessions. If it doesn't really dip much from the current levels, and after due consolidation starts to show the signs of rise, then we can indeed go for a newer trade. But if not, if it dips further on the lower side and drops below US $96 or thereabout, then we will have to adopt a cautious stance, and rather than going for a long trade, we can even start looking for some further correction, and shorting trade can also be explored. From the medium term perspective, things are still bullish because it has been making higher highs and higher lows, and that is not really going to change much even if it dips below 95, because from the medium term perspective, its swing low is far off, closer to the 85-86 range. So, from the medium term perspective, things are going to remain on the bullish side for a foreseeable future. Only if it declines too much and corrects well below the recent swing low, then we can be concerned. But over next few weeks, I think we will have to allow it some time to consolidate because it is not really far off from its recent peak. So this may be the time for it to consolidate first, and after due consolidation, as it seems to be getting ready for the newer rally, we can get involved and go for a new long trade. But that time is some distance away, some weeks away at the minimum. Of course, it can even rally from the current price level, and it has every right to do so. The only thing is that at the current juncture, we don't really have a trading opportunity with good enough risk reward ratio, and that is the only concern. Apart from that, the formation is still of higher highs and higher lows. But then for us, any trade can also go wrong, and we do have to keep in mind that thing and keep looking for the opportunity with a optimum risk reward ratio. And that is why I think a cautious stance is warranted at the current juncture. From the long-term perspective as well, the things are pretty much similarly poised as was the case for the medium term. Here also, it is sitting on its recent high, and at these current levels, we can go for the long trade or we can sit on the sidelines. Shorting doesn't really look like a good option at the current price levels, but then going long is also difficult choice simply because the risk reward ratio is not that favorable enough. We will have to allow it a couple of months of consolidation, if not more, and then maybe after due consolidation, we can indeed think about investing in it from the long term perspective. But for the time being, it is simply sitting on the top and going for a new trade at the current price level doesn't really seem like a prudent idea. So my take is that the bull run is ongoing. The only thing is we will have to keep a keen eye on the developments in the TJX share price, and as and when things seem to be favorable and optimally priced voice from the risk reward ratio, we can get involved and go for a new trade as well. So that's all from my side for today's session, where we looked at the financials of the TJX companies, and along with that we also saw its share price performance, and on both the count it is exceedingly doing well. But for us to exploit these developments for our advantage, we will have to be a bit patient. We will need to wait, and maybe after some time the opportunities might indeed come our way, and all we have to do is be ready for that as and when it happens. Now it's time for me to sign off for the day. If you have found the session informative and useful for your trading and investing decisions, do write to me in the feedback and like and subscribe to the channel. Thank you all for joining in. See you next time around with an equally interesting stock to work with. Till then, goodbye.